The JSE looking set to open to weaker global markets today, despite new records for major U.S. exchanges on Tuesday, and investors still jittery over debt problems in China's property industry. Now, independent analyst Jimmy Moyaha joining us now to talk us through the latest developments in the markets. Jimmy, good morning to you. Talk us through those markets then. How did the JSE open today?
Good morning, Chloe. Markets opened in the red. We have seen some weakness across the board from the local exchange as well as from the local currency. We've got the rand weaker against the dollar. We've got mining stocks trading a little lower. We've got Kumba and African Rainbow Minerals down about 2% each. So it is a rather bearish open for the morning, but there is obviously that global concern that you rightly mentioned. We have seen some positivity around the US with some earnings being reported, but the overall concern still persists around the inflationary concerns as well as what the rates of recoveries will be like going into the quarter of the year.
Yeah, I don't know what is happening with your connection today, Jimmy, but let's see if we can soldier on. Let's talk company news. Cell C reporting a 148 million rand profit before tax. This is for the 6 months ending June 2021. Help us make sense of their numbers.
Yeah, so Cell C came out with very positive numbers. The 148 million rand profit is off the back of a 7.6 billion rand loss that they realized last year for the same time, and that was largely off the back of a 5 billion rand impairment to their network assets that they made last year as part of their restructuring. They have announced that their restructuring plans are going ahead as planned. They've migrated about 40% of their infrastructure in line with their planned new restructuring. They've also announced that their average revenue per new user remained 66 rand mark for them, and they did say that they saw an increase in their prepaid client base.
Yeah, let's talk famous brands. They've also released their interim results for the 6 months ending 31 August. How are they faring?
Famous brands faring very well. Revenue was up 50%. Headline earnings per share up 140%. Operating profit up about 302%. So these are all from 2020 figures, but if you compare the same figures with 2019, your revenue is actually 22% lower than 2019 levels. Your operating profit is around 41% lower than 2019 levels. They have announced that their GBK business unit in the UK is part of a discontinued operations, so that they filed for insolvency there on that business. But they've also said that they've prepaid about 104 million rands worth of debt, and that some of their figures are looking a lot better than what they did comment on the civil unrest, just around how many stores were affected, how the COVID impact has impacted their businesses. So their leading brands businesses, their signature businesses are sort of looked at differently. I think they've been able to achieve higher margins on their signature brands businesses, things like your Tashes, your Turtle Peppers, that size of businesses. I think their best signature brand that they mentioned was likely because they were less reliant on alcohol sales and they even made it more reliant on day trade. So the lockdown restriction alcohol did have a negative effect as well. On their leading brand, these steers, like beans, thing, did perform better as well. Their margins weren't in the signature brand section, but that is to be expected. Signature brands pricing a little higher than the leading brand section business.
Yeah, Jimmy, unfortunately, I can't get to my last question because of the terrible sound. The picture looks good, but I suspect it's probably got to do with the weather, or it could be technical glitches here. Unfortunately, we're going to have to leave it there.